Last year was a strong one for commercial real estate, but there are cracks forming in that sector. And as Diana Olick tells us, some of the trouble has a familiar ring to it.
2015 was a banner year for big buildings across the nation. Commercial real estate vacancies were low and rents ran high. Loans for commercial development were also big, but what a difference a few months make.
There's been a really interesting shift in the capital markets writ large across not just commercial real estate debt in the public markets, but also high yield debt. And what we've seen there is the beginning of this year, the spreads blowing out.
Investors are demanding bigger yields, and commercial loan debt isn't doing it for them anymore. This debt, called CMBS, is bonds backed by buildings. It is the second largest form of financing behind the big banks, and here's the issue. 10 years ago, we also had a commercial real estate boom, and a lot of it was backed by CMBS. Those bonds have a 10-year lifespan and have to be refinanced now.
We think some of these are going to be remonetized through sales, through asset sales, but some will certainly hit the foreclosure list and end up on the special servicers list of loans to be worked out.
CBRE estimates at least $43 billion in loans could face trouble this year and next, with secondary markets like Kansas City, Cleveland, Minneapolis, Jacksonville, and Hartford hit hardest. Yes, banks could step in, but they're getting hit with a lot of new regulations this year that are making them more skittish about real estate.
There are other rules coming out on general debt that are going to be affecting appetites from banks, from the CMBS market, from others to provide capital. That could affect availability. It could also affect pricing of some of those loans.
On top of that, commercial real estate prices fell in January for the first time in 7 years, according to Moody's. And that is not going to make investors feel any better about the sector. For Nightly Business Report, I'm Diana Olick in Washington.